Do you know what's an industry sector that suffers a lot when there's no standardization? The insurance companies that have to pay the claims. So we're going to bring in a panel this afternoon, which I have the great pleasure to introduce you to. So Cheng is the CEO of a policy research institute called the Global Asia Insurance Partnership, and brings an interesting perspective towards the contributions of these public-private research collaborations. We've also got Jackie Higgins, who heads the U.S. division of Swiss Re's public-private partnership practice, and she's very well known to this community. And she's got, at least from what I've seen, she's got more hugs than a Manny Pacquiao opponent, which tells you a little about me. I am born in the Philippines, and I've got a startup. I'm from the insurance industry, Swiss Re in Zurich, and CAT modeling. And what I'm working on right now is a startup called Invulnet, which does physical climate risk assessments for both the insurance industry and for disaster risk reduction, climate adaptation purposes. So what we tried to do here is sort of bring you a panel of not the usual suspects of people trying to sell you large reinsurance contracts, but rather sort of different perspectives to usher in the freshly baked insurance playbook that was commissioned by a GAIP. I think this morning we've got a bit of an insider look from Matt around the capital that was catalyzed by GIP's collaboration with the Insurance Development Forum, of which Swiss Re is a member. And so the playbook, which you can download on the website, came out 45 minutes ago. It can probably be better explained by the wonderful lady that commissioned it, Min Hung. Is more GIP, IDF collaborations the impetus for commissioning the playbook? What was on your mind?
Actually, the whole thing started because 2 years ago, GIP, we worked on a paper together with the Financial Stability Institute in Basel under the Bank of International Settlements. Now, in that paper, we examined what was the public insurance sector, the private insurance sector, how are they taking into account of climate change in their pricing and underwriting. And from that paper, we concluded the insurance sector is at risk of reaching what we call an insurability tipping point. Kind of like what happened in California with the wildfire coverage. So then we started thinking after that paper, what can the insurance sector do to avoid reaching that point? And that led to our second paper called Beyond Protection. Now in that paper, we examined different roles of the insurance sector beyond being just a provider of financial protection. We explored the roles of insurers, not just as insurers, but also as risk advisors, as educators, influencers, investors, and wealth managers. Now, all of these are roles that the insurance sector is already playing, but more on an ad hoc basis. So after that paper, we thought, how do we operationalize those roles in a more specific context? And blended finance came to mind, because that was, blended finance is really emerging as a very key tool to support climate financing. And I started speaking to a couple of my peers in the insurance sector in Asia. And I said, well, have you heard of blended finance? I spoke to the chief investment officers. Are you investing with blended finance? And more than half the time, I would say about 90% of the time, I get the response, what is blended finance? So that led to this realization that we need to raise that awareness amongst the insurance sector of the roles that they can play within the blended finance space. So that's where I sort of approached Convergence and I said, can we collaborate? Let's work on a playbook to explore on these roles that the insurance sector can play in this space to support climate action, specifically the roles of risk advisors, insurers and reinsurers, as well as investors. So that's what led to this playbook. As Augusto said, it's fresh out of the oven 45 minutes ago. So do download, do scan that QR code to download it. It will be available on both the Convergence website as well as the GAIP website.
All right. So do what Min says. I always do that. And the perspective from Jackie might be around why don't they know what these roles are? And why does insurance seem to be late to the table in the blended finance process?
So one of the reasons why and it is so nice to see so many friends here, but one of the reasons why I left kind of 25 years of emerging markets or blended finance, debt and equity, and moved into insurance, we were talking earlier that some of us, we don't go to school for insurance, we fall into it, was because of an understanding that the public sector didn't understand insurance or the role of insurance or how to use insurance properly. So I think part of the challenge for insurance is it's a highly regulated industry. There are a lot of regulatory requirements that are not placed on debt and equity similarly. There's a lot of institutional barriers with respect to understanding risk and the like. And then there's a lot of other, I would say, kind of structural constraints related to looking at, insurance is complicated, but if you're looking at the asset management side and you're looking at it from an institutional investor perspective, a lot of it is, around matching assets and liabilities.
Right, so a bunch of hoops that insurers have to go through that perhaps is not so visible to those in the blended finance community, which is why we're creating this awareness. I mean, 15, 16 trillion dollars is a drop in the bucket, but every little bit counts. Let's sort of riff on that, maybe, Min, and tell us a bit about what misconceptions you're hearing when you talk about blended finance and insurance.
Maybe not so much about blended finance first, because I think it's more general than that. I'd like to share, it's come up now. So this is a slide, a picture that a colleague of mine sent to me. So we were running a capacity building program, a session with government officials across the world from various different ministries. This was a capacity building session that was organized by the Singapore Ministry of Foreign Affairs and UNDP. And we asked this question: what do you think of when you hear the word insurance? And this was the answer that I got. Now, I'll be scared, but I'd like to get a raise of hands. How many of you agree with fraud? Thank you. How many of you agree with waste of money? Thank you. But what shocked me was the answer that says, oh God. Now, jokes aside, this is exactly that misconception about insurance, that insurance is a waste of money, that insurance is a scam, it's a fraud, it's just after money. Now, first of all, I'd like to say which company, profit-making company, is not after profits. Insurance companies are after profits too. They are a profit-making organization, right? So I think the main misconception that I hope we address in this playbook is that we're able to show the value that the insurance sector can bring to this space. That it isn't just about investing. It's about bringing the insurance sector in upstream, early in the piece, come in as risk advisors to support the risk reduction efforts, to support the risk management efforts, come in as insurers and reinsurers to provide financial protection, and through those capabilities, potentially improving the risk return profile and better able to crowd in private capital, and then coming in as investors. So this is the misconception that I hope we address in this playbook.
Right, thanks very much. It reminds me of the conversation we were having at the lunch table, where you might be in the public-private sector, Department of AXA, Allianz, whatever, be pulled up in front of the commissioner or Congress and asked, why aren't you doing more about this or that? Which sort of turned the discussion at the lunch table around. Insurers don't tend to try to solve market failures. That's, to some extent, the regulator, but largely a public sector consideration. And so I think the insurance sector is very interested in collaborating with the people in this room because Jackie can do the translating for us around the different roles that the insurers can participate in. I'm a traditional old insurance analyst, so I'll say, so is this leading to some kind of premium? I'll do the analysis, yes. But that's not what the public good is looking for necessarily. And some transition between this needs to be an insurance sale, ultimately, and that's what pays for my analysis, and something around a problem that society has to solve. And that transition, I think, is in the hands of this crowd. And maybe, Jackie, in terms of maybe the investor role, the provider of capital, collaborating with concessional capital, you might be in a good position to speak to that role.
Well, I think insurance is complicated, right? We talked about this, the three different perspectives in terms of, and I wouldn't just say insurance, I would say the insurance industry writ large, right? There's the climate analytics and the capacity for them to price risk, to help you understand what the risk is. And then there's the component of what insurance is, which is risk transfer, right? Transferring this risk that you're holding on your balance sheet to the private sector. And then there's the investment side of it. So what is insurance as an institutional investor doing in terms of investing in some of these? I think that oftentimes in the blended finance space, we talk about it, and we tend to often talk about it as solely on the institutional investor side. So how much capital is the insurance industry or insurance companies putting at play in either these kinds of products, or even, I would say, something that we're really talking about is resilience writ large, right? If resilience is so important to economic losses, why aren't insurance companies investing more in resilience? And I think what we're trying to do is shift the conversation around and look at the industry, and as Min said, look at it more from the upfront project preparation, the risk management, the risk preparation side of the business. So the majority of my time is spent here in the US working on natural catastrophes. My largest client is FEMA, who is furloughed now. But where I spend most of my time is sitting down with my clients, and literally sitting down with them and helping them to understand what is their risk. Most people don't even know what their risk is. You can say that about an individual who is the risk manager for the city of Montpellier. You can say that about the risk manager who is in the mayor of Casablanca, as well as you can say as someone who's looking at a project like the hydropower project we did in Nepal that Swiss Re was a part of. They don't understand what their risk is. What is their natural catastrophic risk as it relates to this project? And when do you want to bring the insurance companies in? Do you want to bring them at the very end of the conversation when you're done with your financing terms, and then you're negotiating terms, or you want to bring them up front because they might have a different perspective and the ability to help you really evaluate and understand that risk? So I think that it's not unlike 30 years ago when we talked about public-private in official development assistance. You can't look at the insurance industry as a monolith, similar as like the public sector can't look at the private sector as the private sector. So I think that we need to start doing a better job, and this is what I love about GAIP, is helping to really educate the consumer about what is insurance and what are the various aspects of the skills and experience that the insurance industry, whether it's in a company like myself or whether or not it's a broker in the industry or a trade association or the insurance commissioners in the United States or other regulators, can bring to help you understand the role that it can play, because it's much more complex in this complex world.
Right, let's pick up on that point. So we started with insurance companies as providers of capital with a good handshake towards the blended finance collaboration. And you mentioned that when the deal's being made, there's a certain contribution in terms of a risk advisor or a climate risk analyst, let's say, that insurers are very, very familiar with its outputs leading towards premium calculations and the like, but could easily be directed towards the investment analysis process and just fitting in, the scoring of whatever assets you want to reduce risk for. That's actually sort of at the base of expected loss calculations in insurance analysis. So maybe as a person that's commissioning a lot of policy research and have a lot of projects on analysis of climate physical risk, what does that look like from the GAIP point of view in terms of the contribution of the insurance sector as advisors?
I think if you look at all the industries there are in the world, which industry is an expert in risk? It's the insurance industry, because they are in the business of risk. Yeah, I used to be the chief risk officer of a life company, and I used to tell them, our job is not to avoid risk. Our job is to take on the risk that people are uncomfortable with taking on themselves. They transfer the risk to us. So to me, that is the basis of insurance sector. And if I could just bring all that into a bit more context, and Jackie, you talk about the hydroelectric plant in Nepal, I'd like to bring that up as an example. We talked about that in the playbook as well. So there was this hydroelectric plant in Nepal that was needing to be built, but the financiers were concerned about it because of earthquake risk in Nepal. Everyone knows about the 2015 or 2005 earthquake in Nepal. So it was getting difficult to find financing for that hydroelectric plant. Now, Aon, an insurance broker, came into the picture, right? And they brought in Swiss Re. And together with their risk advisory services as well as the insurance services, they developed a parametric earthquake insurance for this hydroelectric plant. And with this insurance in place, the financiers were more comfortable with it. It allayed their concerns to a certain extent, and it got financed. And if I'm not wrong, it got financed through a blended finance fund. This hydroelectric plant was launched last year and is now providing stable electricity to 9 million people in Nepal. That's the power that insurance can bring. Now, if I could quote a line from the Prime Minister of Barbados that I've been quoting a lot, what she says is, what's uninsurable is not investable either. What's uninsurable is not bankable either. So this is the power that insurance can bring. With the expertise that they have in risk management, with the reach, the leverage that they have, this is the value that they can bring to this space to support blended finance. The leverage that they can bring to support climate action is huge.
Fantastic, thanks. So people like examples. There are many in the playbook, which I'm sure you're all going to read very diligently. But let's maybe bring in Jackie and say, what's the best expression of the handshake between insurance and blended finance that you've come across, or maybe that you want to talk about?
I think she talked about the hydro plant, that I think that was a really good example.
The second best
example. Well, I think one of the examples of how did I even come to Swiss Re was when I was at IFC, we worked on something called the Manage Co-Lending. It was a syndication product portfolio. And we were trying to crowd in institutional investors into that vehicle for infrastructure investment. And we realized that the terms on offer, I mean, this isn't really playing well for my insurance industry, but it is an interesting blended finance instrument, were not attractive to institutional investors like Swiss Re. And so we were fortunate to get kind of a first loss component from the Swedish government that was able to provide some comfort and to augment the terms and conditions for Swiss Re to be crowded in. But I think, we talked a lot about, I think, as I said in the beginning, less about how do we crowd in insurance institutional investment money. It's again going back to this risk-taking and risk mitigation component where I think where insurance really can be of value, which is really de-risking these investments to crowd in other institutional capital that has a better alignment to this sector. And I think that the insurance industry is willing to look at those structures and to provide that support.
Fantastic. I think the shepherd's crook is coming out. This is a short session, but you may want to sort of leave this crowd with a pithy statement that you might want them to take away. Men?
What statement?
Is there like a lightning round, any kind of a phrase that you might want to leave with this audience?
I think, I've been repeating this, right? Insurance sector can bring a lot of value, but you can only maximize that and optimize that if you bring them in early. Don't bring them, I think one of the stakeholders we interviewed as part of this process said, insurance is typically page 105 of Appendix 5. Don't let it be that. Bring them in earlier and they can do a lot more.
Great. Jackie?
I think the one thing that I would say is typically, and maybe this is why I'm always on panels, because I'm a woman and I'm a fake blonde, I guess. But typically, insurance is, especially my company, right, 160-year-old reinsurance insurance company is thought of very stodgy and old and not very innovative. And I think that we need to change that. We need to turn that kind of perception around. I think that when you look at the insurance industry, especially companies like Swiss Re and Munich Re and some of the really big reinsurance entities are really trying to innovate around some of these insurance products. And so one in particular is called parametric insurance, which is it's not novel. It's been around for about 10 years, but the uses of which are new. And part of the reason why it's able to be kind of talked about as innovation is because of the advent of technology and our ability to collect data on natural catastrophic events. And so I think that with the advent of AI, with the advent of really remarkable satellite technologies, we can understand this changing climate like no other part of the financial services industry. And I think that this is critical to everything we do, to response and recovery, to rebuilding, to zoning, to investing. And I think I would just, I don't know, maybe think of insurance a little bit differently than just kind of your, run-of-the-mill homeowners insurance, progressive salesperson.
Well, thanks very much. Nice plug for progressive. I'm going to leave you with a challenge. We're having another one of these next year, aren't we? And you're going to report to me which lesser developed country or emerging markets economy you put together a catastrophe bond deal for. And I'm taking names. And I will see you next year. Let's thank the panel.